and welcome to Ticker Tapes. 2 weeks ago, we highlighted the plight of one of the most high-profile meme stocks. Online exercise platform Peloton stock became a poster boy for working from home during the pandemic as consumers with time on their hands bought its bikes and exercise equipment and signed up for classes rather than heading for the gym. However, the number of consumers that were willing to part with several $1,000s for a Peloton bike was always likely to be finite, and sure enough, growth stalled and the share price collapsed. 2 weeks ago, we suggested that tech giant Apple might be interested in buying Peloton at a bargain basement price. Since then, it's emerged that Amazon and Nike have both been evaluating a bid for Peloton, and though Apple hasn't shown its hand, industry insiders believe that the California-based company will have run the numbers too. For its part, Peloton has opted for some self-help and tough love, cutting 2,800 jobs globally, replacing its CEO, and making $800 million in cost cuts, with the company saying that it's open to exploring any opportunity that could create value for Peloton shareholders. The combination of bid talks and corporate restructuring saw Peloton stock jump by 45.2% over the last week. The growth in retail and meme trading during the pandemic, and particularly since January 2021, has impacted markets in ways that we couldn't have imagined at the time. As a result, the SEC is proposing that stock trades be settled on a T+1 rather than a T+2 basis. The current 2-day settlement cycle is thought to create too much uncertainty and overnight risk for current trading patterns. Moving to Trade+1 settlement timetable would help to reduce that exposure, which in turn would help to lower the level of collateral or margin that brokers and other market participants need to pledge to their clearinghouses. 12 months ago, online broker Robinhood was forced to raise billions of dollars in new cash from hedge funds and other investors in order to be able to meet its rapidly growing margin and working capital requirements. Meme traders came very close to breaking the stock market settlement systems in January last year, but not in the way that they had intended. The SEC proposals are one of a number of initiatives aimed at making sure that doesn't happen in the future, and if adopted, the move to T+1 settlement would happen in the first half of 2024. Much of the talk in the media of late has been about how the meme stock may be fading as growth, technology, and recovery stock prices were hit hard by January's market correction. Of course, as we have often noted here, the downturn for many meme stocks started in the autumn of 2021. Not everyone is downbeat, however, and investment bank Evercore has picked out a long list of 25 meme stocks that it thinks could recover. These include Eventbrite, Adapt Health, Cardlytics, Wayfair, Sunnova Energy, Beyond Meat, Plug Power, Teladoc, and even AMC Entertainment. 2 factors link the stocks on Evercore's list. Firstly, they have had a substantial share price fall, and secondly, there is a significant short position in the stock. If that sounds familiar, don't be surprised, because small cap and energy stocks rallied sharply in similar circumstances following a sell-off in 2016. And of course, AMC and GameStop, which set the whole meme movement rolling, were stocks that met these very criteria in January 2021. It's said that history doesn't repeat itself, but it does rhyme.